Okay, so welcome everyone today to our Historic Rehabilitation Tax Credit Workshop. This is part of the West Virginia Historic Preservation Conference that the Preservation Alliance of West Virginia puts on every other year, usually, or 2 years in a row, online and in person. So I am joined today by Susan Pierce, who is the Deputy State Historic Preservation Officer with the West Virginia State Historic Preservation Office. She'll be leading the workshop today. So if you have any questions, you can submit those in the chat and we'll answer those toward the end. And if you're having any technical difficulties or anything, please feel free to send me a message and I will try to help you with those. So I'm going to pass it on to Susan. Thank you so much for being here today.
You're welcome, Danielle. Can everyone hear me okay? Okay, I see everyone's muted. And I want to thank Preservation Alliance for hosting this and persevering. The pandemic rattled their plans for their in-person conference, and I think this has been a great way to go with technology and still educate and be involved with people and share information and hopefully answer some questions that you may have as we go through this. And today we're going to talk about the state's Historic Rehabilitation Tax Credit Program, and we're going to focus on residential projects, how that works. But actually it works pretty much the same as the commercial credit. It's just that our residential credit is just at the state level. It's not a federal program yet. So Danielle is going to be my clicker, so to speak. So let's go to the next slide, please. So the program was established by legislation passed in 1999, and it basically took off in about 2000. We administer it at the State Historic Preservation Office. We're located in the Culture Center as part of the Department of Arts, Culture, and History, and we partner with the Department of Revenue. We work with our tax colleagues, and actually in the last couple of weeks with changes to the commercial credit, they've been real helpful, and we're establishing a really good relationship with them. Next slide. So it's a 20% credit on your state income tax for qualified rehabilitation expenses. And as I mentioned earlier, there's currently no twin, so to speak, at the federal income tax. You can't take these credits on your federal income tax return, but you can take them on your state income tax return. Next. So we're going to talk about what's eligible, what the eligibility requirements are. First, this is for private residential buildings. If your own house, if you make repairs or rehabilitate parts of your historic home, you can take this credit. We do require that it is listed in the National Register. We'll talk a little bit more about that. And we're also going to talk about the financial requirements that are necessary. And then we're going to talk a little bit about what standards you have to meet, which are the Secretary of Interior standards for rehabilitation. And that's an overview of the different topics we're going to talk about. So next slide. So the National Register status. You may be living in a property that is already listed individually, or you may be living in a building, a house that's within a historic district. If your house is a contributing resource to the district, you're qualified for this credit. If your house is not yet listed, but it's been determined we consider it eligible for listing, then you can start on your tax credit, but you have to have the building listed on the National Register before you can submit your Part 3, which is the final certification of all the work that you have completed. So you have some leeway in there, those choices of either being listed individually in a historic district or not listed yet, but eligible for listing. And you do your nomination as you work on your tax credit application. Next slide. In terms of material rehabilitation, there's a threshold of cost, so to speak, of what you have to hit in order to take the credit. And we're going to talk a little bit about this. You have to spend more than 20% of the assessed value of the building, excluding the value of your land. So if I went to my county assessor, I could find out how much my assessed value of the building is, not what I would necessarily, the purchase price of the building, but the assessed value that the county has on my property, which is less than the actual value. And then excluding the value of the land, I have to spend at least 20% of that figure in order to take the tax credit. And then there's a timing aspect to this. I kind of refer to the Price is Right and that one game where the price thing goes up and down and you have to figure out where the price fits within that time frame. You have to decide what your 24-month period is for your material rehabilitation, and it ends on the December 31st of the taxable year for which the credit will be claimed. You may be working on your property, on your house for quite some time, but you have to pick that 2-year period yourself of when you're going to take that credit, that 24-month period. And obviously you're going to pick the 2 years where you did the majority of your work because that's when you spent the most money. And then finally, any portion of the credit that you can't use in the tax year that you earn it, you can carry it forward up to 5 years. So you can use your credit for multiple years. And that's helpful too when you have spent a great deal to rehab an old building that you may have purchased that needs a lot of tender, loving care. And that way you can take advantage of the credit for several years. Next slide. So here's another way to look at that adjusted gross basis that you're using to figure out how much you need to spend. So your acquisition cost plus improvement cost minus the non-depreciable cost, the land, equals the depreciable total eligible basis for your project. So you may be buying this property at the beginning, and that also can be part of what you determine is your adjusted gross basis. Now, I will say a disclaimer. I am not an accountant. My staff are not accountants, and we strongly urge you to work with someone who works with figures, dollar figures. So, check with your accountant, and we'll try to answer as many tax related questions as we can, but we also refer those questions when it gets to the dollars and how that works. We work with our tax colleagues over in revenue. Next slide. So another part of eligibility is when you actually do the work on the building, you are required to follow the Secretary of the Interior standards for rehabilitation. And there's 10 standards, 10 rules, and they address various aspects of the exterior and the interior of the building. Overall, the standards want you to preserve the historic character and then protect the distinctive features of your building. They also recommend repair rather than replace. They also look at new additions to make sure they're compatible with the historic part of your building. And when you look at additions, they often look at whether or not they can be removable, because that helps us understand, what is the original part of the building and the new part of the building. Do they kind of overwhelm each other, which is not really a good thing, or can you see where the one begins and the one other ends, so that it hypothetically you would remove it and you'd still have the historic part of the building. Now, there's also an archaeological component to the standards. Some properties have archaeological resources. If it's an old farmhouse, you might have a trash minute in the backyard because they didn't have waste management coming and picking up their garbage. They threw it out in the back corner of their yard, and that becomes part of the history, because obviously you can go through that midden and find china, porcelain, just different aspects of material culture and artifacts that teach us and tell us about what the use of the building was and how affluent the family was who lived in that house. So the Secretary of the Interior standards remind us that there may be potential impacts to the archaeological resources around the building. Next slide. Qualified expenses. There is a fairly extensive list, and our website has that list specifically. But just to touch on a few of those: structural repairs and the rehabilitation of the residence. That can be repairing windows, that can be restoring plasterwork, replacing the roof. All those types of actual construction activities are qualified expenses. If you're working with an architect or an engineer, those fees can be added to your qualified expenses. And then there are fees and permits that you may have to apply for and receive, as well as you're paying interest perhaps on construction and taxes on your project. So those are the types of things that are qualified. But again, there's a longer list, especially one that goes into greater deal about the different interior parts of the building that are qualified expenses. So take a look at that list on our website. There are expenses that are not eligible to be used, and the next slide refers to those, if you don't mind moving on, Danielle. So you don't get to take a tax credit on how much you spent on buying the house, or if you put on an addition, that work doesn't count toward the tax credit. All these other things that are listed here. One that's a little tricky is site work. If you're going to do landscaping, that doesn't count. And actually appliances, even though you may consider those permanent fixtures, they're really not, because you can always update your dishwasher. And cabinets are not included as an eligible expense, which it took a while for me to understand that one, or to accept it, because we all make good investments in our cabinetry, but they're perceived as removable, and so they don't apply to the eligible expenses. And again, there's a longer list and a more explanatory list on our website at that address at the bottom of the screen. Next slide. Okay, and not to forget that you can also take a tax credit on outbuildings associated with your residence. So if you have a historic garage that was listed as a contributing resource in a district, it's eligible. Barns, kitchen houses, and then offices. Some historic buildings have outdoor offices. I can't remember the name of the property. It's not coming to me this morning. Up in Bethany, the property up there, there's an octagon house that the gentleman used. It's all going to come to me later on. But his office was an exterior building. So hypothetically, you could rehab your office space. We did have a recent carriage house associated with a property up in Clendenin that was rehabilitated. Roof repairs were made, and they met the threshold, so they were able to take the tax credit. So don't forget that that's a possibility. Next slide. I'm going to talk briefly about the application itself. There are 3 parts to it. Part 1, you fill out an application form if you own a building within a historic district, and we certify that it is a historic structure. However, if your building is listed individually, you are not required to fill out the Part 1, because when you fill out the Part 2, there'll be a place where you identify the building and when it was listed in the National Register. And you get a shortcut, so to speak, if your building is listed individually, but you can just as easily fill out the Part 1 about the significance of your contributing building in the historic district. And that generally involves taking a look at the nomination and copying the page where the building is listed as a contributing resource, and then just briefly describing the historic character of the building, what it looks like presently, and how it contributes to the district. So that's not that hard. Part 2 is the description of what you plan on doing. And we ask strongly that you submit this before you start your work. If you already start your work, you run the risk that you do something that does not meet the standards, and then you have to decide whether or not to forget about taking the residential tax credit or changing what you did in order to meet the standards. In Part 2, you describe what the current appearance of the aspect of the house and what you plan on doing to that part of the house. So to take something simple, you would describe the current condition of the roof, such as it is now leaking under the eaves, and then side by side to that would be a description of what you plan to do to repair the roof. And there are simple descriptions that you can write, but you need to describe what it looks like now, what's wrong with it, and what you plan to do to fix it. And that generally we look at before you start your work and approve it. And we also ask at that point in time, we request a fee. It's a small fee. It's not a very expensive fee. I think the maximum might be $500 for the residential tax credit. Then once you have finished the work, you submit the Part 3, which basically summarizes what you have done for the building in order to bring it up to complete the repairs and to improve the building. In each of these phased applications, in each part, we ask that you provide photographs of the building. In Part 1, it just needs to be an overview of the exterior facades, each elevation, and then a general idea of what your interior looks like. In the Part 2 section, you will want to include close-up photographs of where you plan to work on masonry. If you plan to repoint the brick exterior, you want to document the current condition. The roof, close-up photographs of the leaks or the rafters inside the roof in the attic, that type of specific photographic documentation of the original appearance of the building before you conduct your repair work. And then in Part 3, you provide photographs of the improved appearance, how you completed the project. And at Part 3, we generally sign off and you keep that original certificate of approval, and you add that to your income tax return when you have finished with the project. There's also an amendment form. If you get partway and find out that you need to do something else or you need to add something to your project, then you can use that form to add to your project application. And that gets filled out and submitted to our office, and we review that as well. That in a nutshell is the application process. Most of it is fill in the blank. Parts of it are a bit of writing to describe the appearance of the building, but it's all pretty straightforward. And if you have any questions, you can certainly email or call us and we will help you get through that application. But take lots of pictures would be my advice. Next slide. There's also the possibility that if you earn more credit than you can actually use in your state income tax return, that you can transfer those credits. And we have a form that we ask you to fill out so that we can keep track and provide information to the Department of Revenue to keep track of who's using the tax credits earned. And that's a pretty straightforward process. We just ask that you fill out the form. All of these forms are available on our website. The link that I showed earlier in a couple of slides can be modified to get to the home page for tax credit information, and then you can look for each one of those forms. There's also a form that the tax department asks you to fill out, the RBIC credit form. That's part of your income tax return as well. But you can give your credits, so to speak, to someone else to use. Next slide. There are other financial incentives that I'm just going to briefly touch on that our office has. Our development grants, which are a 50-50 matching grant program that is annually provided by the state legislature. The applications are due in March. They're based on the priority of the work. It's a reimbursable grant program. You spend and make the repairs, you spend the money up front and you get 50% of what you have expended back for doing that brick and mortar rehabilitation work, that repair work that's necessary. And those development grants are available to just about everybody. So it does have a covenant attached to it that goes with your deed. If you are using your own personal money, and you don't need to have a covenant on your property, but in terms of if you use our dollars, it follows federal rules, which includes agreeing in your covenant that for a certain amount of years, you're going to maintain the character of the historic property according to the standards for rehabilitation. And that time frame is based upon how much funding you get from our office. And then the other financial incentive on the next slide is the commercial rehabilitation tax credit, which is simply the same program as what I just explained. Follows the same three-part application process, except you use the federal application form, not the state residential form. And then I forgot to change the amount of the state credit for the commercial rehab. It is now 25%. I forgot to update this slide, but you do follow the same Secretary of Interior standards when you conduct the commercial rehab. You can phase this project as well. And then I think the last slide is contact information. Our office and our phone number, as well as our address. And actually, this is the most important website address here, because it will take you to our agency at wvculture.org/SHPO. It'll take you to our section of the agency, and then /tax credit. And then I would be remiss if I did not mention that we are partially financed with federal funds from the National Park Service. And we do not conduct unlawful discrimination on the basis of race, color, national origin, age, or handicap. And that information is required because we use federal money. Which is kind of a dull and dry kind of thing to end with, but I hope that overview has helped you understand that program. And if you have any questions, I think Danielle is going to moderate any discussion at this point. So thank you, Danielle.
Thank you, Susan. That was really informative. I actually have a question to get started, and then if others have them, you can either submit them in the chat, or we're a small group so we can take turns unmuting. But my first question is, Are there rules to homeowners doing the work themselves rather than hiring a contractor when using the tax credit? I think of like a lot of people who are do-it-yourselfers and wonder if you've had experience with that.
I think some people have, but for the most part, people use roofer contractors or other contractors to do significant interior work. But there's no reason why someone can't do the work themselves. It just has to meet the Secretary of Interior standards for rehabilitation, the mouthful. It's just that they will, I don't know, I don't think they could charge their personal time. I don't know how that would work. They would obviously be able to take a tax credit on whatever equipment, I guess, or materials that they use. I'm not sure if you did it on your own that you would meet the threshold to be able to take the tax credit. So that's a good question. And if someone was interested in doing that, you know, we're gonna look at it and see if it is worth their while to do all that. But, you know, I guess hypothetically, on a large project, someone could be able to do that if they took it on themselves, but they would have to. I know that most people who do their own repair work, judging from my own efforts and my friends' efforts, when you do it yourself, it takes a long time to finish the project. So you might not meet that 24-month time period. Another question?
Okay, that makes sense. Yeah, any other I don't have any in the chat yet, but if anyone wants to unmute, we can give them a moment. And then I also thought it might be worth mentioning that that there are districts that are residential. Like I'm thinking about in Charleston, there's some in Elkins. So visiting your website, they can find information about whether or not their property has already been listed. They may not even realize that they have this opportunity. Okay, so we do have a question in the chat from Keith. It says, I've been reading a lot of news lately about potential federal incentives for improving energy efficiency in residential structures. Are there provisions in process to match these at the state level, as well as to make sure these energy efficiency measures don't negatively impact historic preservation through window replacement, for example? So that's in the chat in case you need to read it.
Yeah, that was a lot.
Yeah.
Yeah.
Basically, it sounds like energy. If there anything at the state for energy
Well,
efficiency,
there are, and we have colleagues over in the West Virginia Department of Energy that if you had a specific question, that we would be able to reach out to them and see how that would coordinate with our programs. And there are some energy efficiency measures that do have the potential to negatively impact a resource. Window replacement is probably the biggest issue with respect to that, because new windows obviously replace the historic wooden sash, and the standards are very clear that repair is better and more appropriate because you are preserving the historic fabric rather than just throwing it in a landfill. So there are alternative means to improve the insulation of a window, and that information is available through the preservation briefs on the National Park Service's website. The Technical Preservation Service has multiple pieces of information about energy efficiency while maintaining the original window. But then if a window has, you know, some windows do reach their lifespan, or that they've been impacted by poor care, and there are ways to stabilize that window or windows. Actually, at the Steely Goff House, for example, I know that Preservation Alliance has conducted different window workshops over the years that help people understand how to repair the existing windows. So there's a lot of information out there you could spend, and probably, I don't know, Danielle, if you've already done a window webinar, but you could certainly just focus on that aspect and how to balance energy efficiency and maintain the historic window. So if you haven't done it already, let's put together a window webinar and talk about these issues.
Yeah, we did one last year. I don't know that it necessarily went into the detail about the energy efficiency, but I can revisit that. And I think that these kind of technical questions we can keep revisiting over time and reaching folks.
Sure, definitely.
Yeah, I wonder too, like, if I remember reading about neighborhoods where they were wanting to put solar panels on the roofs. I think that was in Washington, D.C. So, they had overlay districts and things and some zoning that they didn't want to have the solar panels. But if someone came to your office and was like, we want to put solar panels on our roof, is that allowed? Or is it maybe if they're hidden and you...
Actually, we have had a few projects, and I think they came out of the USDA for us to review, and one or two of them were up in Shepherdstown, and it's a matter of where you place them. Keith is nodding his head. I know, Keith, you're up there in the Eastern Panhandle, so I think, ultimately that project went forward, but I think some people were a little nervous about the solar panel on the property. But if you site it on a house, can have various locations to put the panels. The rear of the house can accommodate those, and so you're not truly impacting what the public sees in order to have that solar energy. So it's doable. You just have to figure out the best way to accommodate that, to make sure that you're not impacting the building itself, and also that you're not changing the visual appearance of the building too dramatically. So
I don't know if there's another there's another question. I'll shut up.
Oh, no. It's question. Like, you can ask your question. This is just.
Oh, I was just going to sort of reply to Susan and say sorry about that very long-winded sort of academic professorial question earlier. I was just want to kind of make sure, or wondering if the state was prepared for any sort of large I don't want to call it an onslaught, because I think it's a good thing with all these energy efficiency measures coming into place for climate change. But I feel like there's going to be a bunch on the horizon here, and I want to make sure that the state is, kind of thinking along those lines, or sort of assess your level of thinking about these potential measures. I think it's very preliminary. I know they haven't even passed the legislation yet, but I'm foreseeing perhaps some challenges, especially with Windows, of course.
It's always been a challenge, actually. The first thing that a lot of community development block grant recipient cities, when they are helping with low-income housing, the windows are the first thing that they want to replace. So it's been there forever. Mm-hmm. So you just have to deal with it and try to work and convince people to use alternate ways to limit energy loss. There are obviously lots of studies out there that you can find that actually tell you that windows are not the primary source of energy loss. Most of it comes out in your attic or other ways that it can be lost. So it's just a matter of weatherproofing your home and making sure that you maintain it properly.
Yeah, I'm just hoping that the feds get that message too.
Well, and our partners in the National Park Service and the National Conference of State Historic Preservation Officers are always working on these issues to try and balance what one agency believes is the way to go versus historic preservation and how that works. But thanks for bringing that up.
So there is another question. Sarah asks about if the building is owned by a business, or even if it's not used for commercial purposes, can the business take the residential tax credit, or does it need to be owner occupied?
The residential credit is owner occupied, but if a business owns a residential building, are they renting it?
For this purpose of this question, no, it's like unoccupied, but it could be a residential building in the future. It just isn't.
Well, they would take advantage of the commercial project, because it sounds to me that it would almost be a rental. And that makes, even though it's a residential property, it's a commercial property actually, because it's earning income for the business that owns it. So they could qualify for the commercial tax credit to rehab that building.
Okay, and if they weren't looking to rent it, it would have to be occupied in order for them to.
Right.
Okay, gotcha. Well, no, I think my question is very specific. It's I spend a lot of time up in Moorfield, and there's a couple farmers who own old buildings that are on their land. So they farm the land and they own the property, but the building isn't occupied. So and I know that they're interested in, like, potentially restoring the building, but it's kind of a tricky situation because they're not living in it, but they are farming the land, but it wouldn't necessarily be used in the future for, renting. So it's a very unique situation. I was just kind of curious. So thank you.
Well, sure. But we could, if they're ever interested in, looking at rehabbing the building, obviously I wouldn't want to put money into a building if it wasn't going to be used, but they could stabilize it and mothball it until they decided what to do with it.
Gotcha. Thank you.
Sure.
Yeah, I think that's something that we've been trying to discuss amongst ourselves. And Sarah brings up a really good point about farmers. Like, I think that there are a lot of farms that are eligible, and barns and buildings for both the commercial and the residential tax credit, and just like getting that information out there to individual property owners. So maybe that's something, we could build on in the future, a very specific focus group to let them know this is available. Because I wonder too, like sometimes the farms are so big that maybe they have someone who they bring on to work and they could have them stay in the house, and they, like, in exchange for rent, they could do work. So if you had, as long as someone is, but if it's someone else occupying it, then it would be the commercial, which you might want to have anyway, because that's combined with the federal.
Right.
Okay, so any other questions from the group? I think these are really good ones so far.
Danielle, will this recording be available somewhere? It would be really useful for me to show to my students, for example, when we talk about this in my HP classes.
We're going to work with the State Historic Preservation Office to make sure this gets online. And so I will definitely let you know when that's available, and we'll send out some e-newsletters and things. So yeah, please
that'd be great.
Share around. I think
Thanks.
Someone else had unmuted. So if anyone wants to unmute and ask a question, feel free to.
Just quickly and follow up to the recording. Is the slide deck available?
We could provide that if that's okay with you, Susan.
I think we had talked about putting it up on our website.
Yeah.
So yes, it will be available.
Yeah, it might just take a week or so for the turnaround to get it online, but we'll send some information out.
Yeah, if you would share that, that would be great. Thank you.
Who asked that question? Was it Bill?
Yes.
Okay. Actually, we'll make sure that it's available, Bill.
Thank you very much.
So one final call for questions here. It says, thank you from Darlene. Arthurdale Heritage is trying to get residents to preserve the original homes they live in, and this info has been very helpful. Yeah, I think that's what we're hoping to do too, is to reach more people in the neighborhoods and let them know, did you know this is available? So anything we can do to help spread the word. I know in Shepherdstown, they have neighborhoods that qualify, Arthurdale. I'm sure down in Monroe County, they do as well. And Elkins has a couple neighborhoods, just knowing where some of the folks are from. But I don't see anything else coming in. So I just want to say thank you again to everyone for joining us and for Susan for putting this workshop on.
Thank
And
you.
we'll be starting to meet in person. We're going to have a cemetery workshop with the AmeriCorps members at the end of this month in Morgantown. And you can check back at our website at P as in Paul, AWV.org for more information for any upcoming workshops and conferences. So thank you all and have a great day.
Thank you very much, Danielle. Bye now.
Bye.
Thanks, everybody. Good to see you all.
You too.